Good morning, everyone, and thank you for joining today. My name is Hajra Talat, and I will be your host for today's webinar on VAT compliance and key requirements for businesses in the UAE. So, before we dive right into the webinar, I would like to give a brief introduction about our company. Acme Group has firmly established itself in the GCC region and Egypt as a reliable tax and financial solutions company. We consistently provide high quality solutions catering to various businesses across various industries. Our strength lies in our expert team members and their capabilities, driving us to the rapid expansion. Our strategic approach of providing tailored solutions for each client keeps us competitive in today's challenging business environment. We prioritize quality and expertise, fostering long term relationships. Our exceptional team consistently delivers value efficiently, making us the preferred service provider. Moving on, I would like to give a brief introduction of our speakers for today's webinar, Mr. Huzaifa Abu Heba. So, Mr. Huzaifa Abu Heba is a seasoned tax expert, an FTA approved tax agent in the UAE, with remarkable 11 years of track record in accounting and taxation. He brings a wealth of expertise to various business sectors. His specialization lies in handling indirect taxes, including VAT and excise, while showcasing proficiency in streamlining financial operations. Driven by a self motivated and ambitious nature, Josefa's dedication ensures seamless task delivery, even in challenging situations, making him a reliable and efficient professional in his field. As a tax associate director at Acme Group, Josefa plays a strategic role, offering valuable tax advice and ensuring strict compliance with tax regulation for clients. His standing as a FTA registered tax agent adds further credibility to his services. Josefa has continuously honed his abilities to deliver exceptional performance and solutions to the company. So before we dive right into the webinar, I kindly ask our audience for today to share their valuable questions in the Q&A section, and this will contribute to an interactive session, and so that you can derive maximum value for attending, and your participation with the Q&A would be very important to the success of this webinar. And in case of you have any questions, please put it in the Q&A section rather than raising the hand. Now, I would like to invite and hand over the stage to Mr. Huzaifa to commence the webinar. Over to you, Mr. Huzaifa.
Thank you, Hajra, for the introductions. Hello, everyone. Good morning. I hope everyone is having a good day so far. And thank you for giving the time to attend today's webinar. I hope today's will be an informative session for everyone. I just want to make sure that I'm well audible to everyone. If can webinar operator confirm if the voice is clear.
Yes, everything is perfectly all right, Huzaifa.
Okay, so today actually we are going to have an interesting topic, and this is about the VAT compliance and key requirements. I know now market trends is all about corporate tax, but we should not forget VAT as well. Now it's been like 6 years of that, and definitely the compliance requirements is going to increase by the time of the tax implementations. So today we are going to topics like such like requirements for VAT registration, also requirements for submitting notification to FTA about changes happen in the company status. We are also going to talk about deemed supplies and what is the conditions of deemed supply, what is the exceptions, and what is the impact of it. We are also going to talk about claim of expenses, the challenges face businesses in UAE about the claim of VAT input or expenses. Also, we will have a discussion about the imports and export. Definitely the import and export of and services, what is the required documentations, what is the compliance requirements, and after that we will be talking about the importance of having books of accounts, like the requirements for record keeping and books accounts, financial statements. So moving to the next slide. So let's start our first topic. So first topic is scenarios requiring VAT deregistration. Next slide, please. Okay. So first topic we are discussing here scenarios requiring VAT deregistration and the new registration. We will also be talking about the VAT deregistration requirement and registration requirement. So to give you like an overall idea in UAE, like if you are a resident business, I mean, if you establish a company in UAE and you are conducting business and you are having a taxable supply, there is a threshold for registration. So there is voluntary registration of 187,500. Once you reach it, you are allowed to register, and there is mandatory registration threshold, which is 375,000 dirhams. It's like 100,000 USD. Once you reach it, it's mandatory to register for VAT, and you have to submit your request within 30 days of reaching the threshold. On the other hand, there is also criteria for non-resident businesses. So if you are not a resident in UAE and you are conducting business, actually there is no threshold for registration, and you must register for VAT within 30 days from your first transaction. So in this slide, we'll be discussing what is the situations which might require the registration and also require a new registration, or what is the cases which require the registration only. So first case we have, it's the impact of a change in ownership. So we have seen here multiple companies. It's either LLC or sole establishments. They are selling their business. They are doing some changes in the ownership. So here we need to differentiate between the LLC companies and sole establishments. In the cases of sole establishments, in case you are a owner of sole establishment and you are selling your sole establishment, deregister your sole establishments, definitely unless you have another establishments register under your TRN. And the new owner, he need to add the new IR sole establishment to his existing TRN, or if he doesn't have a TRN, he should go for a new registration as long as he meet the criteria of registration. On the other hand, when we are talking about LLC, changes in ownership, mostly it does not affect the requirement of change the TRN, because basically the LLC company, it has its own juridical person, so it doesn't require to do changes in the TRN. However, if you did a change in the ownership, you must notify FTA within 20 working days. So this is one of the cases that require VAT deregistration. Another cases we have the impact of change in activity. So basically what we have seen that some companies, for example, established like 5 years, 10 years back with specific activity, sometimes one activity or more. And then after some time, they are doing some restructuring and they are changing the activity. So in principle, once you change your activity or add or remove some activities, you must notify FTA within 20 working days. However, we have seen in some cases FTA required to make a deregistration of the TRN because in some cases there is entire change in the company nature. So you can imagine like there is a company having activity of general trading, and then suddenly they are doing a change in the activity to, for example, consultation or to provide marketing services. So for this, FTA consider this entire change in the company activity, and in such cases, they are requiring to do a deregistration for the old TRN and make a new registration as long as the new entity is meeting the criteria of registration. Also, for the deregistration cases, lately we have some cases of the change in legal type, which I think most of businesses were facing recently. So some business, for example, they used to be a sole establishment and they are registered with FTA on this basis. And later on, they have it changed the legal type of the entity to LLC, or maybe it happened vice versa. Or we have seen in some cases, for example, an entity was established and created as a branch of the main license, and later on, they moved it to be a separate entity. So all cases actually need to be considered, reviewed, and see if you require a deregistration. So for the cases of a change of legal type, yes, you are required to do a deregistration and a new registration in case of the new entity is eligible to register, as well as the branches. So, for example, if you have a branch in nature or in principle, branches is part of the main license and are under the same TRN. But in case you decided to transfer this branch to be a separate entity, so now you created a new legal entity, and this new legal entity required to register and have its own VAT compliance. So this was some of the situations which require deregistration and a new registration. Also, there is another deregistration case, which like if you are below the threshold. So let's say you had a company registered, you were doing business, and for some reasons, your sales and your business is down, and you are below the mandatory or voluntary threshold. So if your supply is below the mandatory threshold, but above voluntary threshold, then it's optional for you to go for deregistration or not. However, if your supply is below the voluntary threshold, which is 187,500,000 dirhams, then in this case you must to, submit a request to FTA for deregistration. So, what is the impact if you are not submitting the deregistration or the registration or the new registration? So, actually, as per Cabinet Decision 49, there will be an administrative penalty imposed on the company if they are not compliant with the submission of those requests. So, first penalty in case you are late to submit a deregistration request, there is a penalty of 1,000 dirham monthly maximum up to 10,000 dirhams. So let's say, for example, you are 2 months late to submit the registration request, you are going to get 2,000 dirham penalty. If you are late 6 months, you are going to get 6,000 dirham penalty. This is up to 10,000. This means if you are late, for example, 12 months, still you are going to get only 10,000. Also, there is a penalty of the failure of taxpayer to notify OFTA with the change happen in their license. As we discussed, if you are doing any change in your company, such as a change in address, change in location, a change in activity, owner, signatory, manager, changing name. Some companies, they are doing a slight change in the name. They are adding and they are adding, some letter, but still you are required to notify FTA within 20 working days. The failure to do so, actually, you are going to get a penalty 5,000 dirhams for the first time. And in case of repeating same mistake or same felony, you are going to get 10,000 dirham penalty. So this is a message to everyone. Please to give attention to your trade license, legal documents. Make sure it's always updated in your FTA portal to avoid any penalty and hassle. And also, there is another concern which we have seen in multiple businesses. Usually, there is no proper communication between the legal department or commercial department or administrative department and also the finance team or tax department, which result in many cases like the finance tax team, they are not aware that there is a changes happen in the business, or for example, there is a new branch open or new or older branch or a new license created. Sometimes we have seen like finance teams are not aware about this. Results later they are getting late notification internally, and then definitely they will notify the FTA late, and they are getting penalty. So this is a message to all businesses to like enhance the internal communication to ensure that the legal department and other concerned department always updating finance and tax team to do the proper update in the tax profiles. So now moving to the next slide. So we'll have a poll questions. It should be easy just to see if everyone is giving attention to our session. So please move to poll question. Next slide. So I think there is a time delay in the slides. Yes. So here we have a poll question, and you will have only 30 seconds to answer it. So please let's start the question. So the question is, what is the time limit to inform FTA for any change of business activity? Is it 20 working days? Is it 30 working days? So we are waiting your answer. So time is out, and we can see that most of our audience are paying attention to the session. Yes, the correct answer is 20 working days, and there is some few answer 30 days, which is not the correct answer. So you have to notify FTA of any change happening in your business activity within 20 working days. Okay, so moving to next slide. So in this slide, we are going to discuss scenarios where current VAT TRN is maintained, but VAT amendment is required. This is same what we were discussing. Like in case you are doing any change in the address or shifting the fixed establishment to a new place, so you're required to notify FTA within 20 working days. Failure to do this is going to impose 1,000 dirham penalty first time, 10,000 dirham penalty case of regarding the other changes, any other changes that require amendment, as we mentioned, like if you are adding a partner, removing partner, if you are changing manager, adding manager, authorized signatory change also. In case of change of the address, we said this in case of a change of the name, change of activity, this all information is required to notify FTA to do the proper amendment in your profile. As we also mentioned, in some cases, some of the amendment it will require deregistration and then new registration, and this will be based on FTA notification. In some cases, if they will approve your amendment and you are going to maintain your current RN. So we are moving to next slide. So moving to next slide, we also have a poll question. And our question this time is, what is the penalty impact for the first time default with FTA? So in case you did not notify FTA within 20 working days, what is going to be the penalty? You have 30 seconds to answer it. So I am out, and we can see that we have also most of the audience, they give the correct answer. Yes, first time if you default to notify FTA, penalty is going to be 5,000 dirham, and 1,000 is not the correct answer. So moving to next slide. Okay, so in this slide, we are going to discuss some details regarding VAT filing and complying to the monthly return, and I mean your regular monthly compliance when it comes to VAT, and also for taxation in general. So as we discussed previously, requirement for registration, deregistration. Now that your business is already registered, then what will be your requirement? There is some, especially with the introduction of corporate tax for like new business owners, they have some assumptions that VAT is also yearly or something. But actually, VAT submission in UAE, usually it's quarterly. For some cases, it's for companies who has a turnover in a year more than 100 the VAT rate is on monthly basis, and in some special cases, you might request an administrative exception and you request the FTA to make your tax period longer or shorter. So let's say if your tax period is 3 months, you can request the FTA to, for example, make your tax period up to 6 months. For example, if your tax period is 1 month, you can ask request the FTA to change your tax period to make it 3 months. This should be done through an administrative exception. This is a request to be submitted to FTA. It has some requirements and it's subject to FTA approval. Why I'm mentioning this? Because we have seen for some businesses, for example, are struggling with their VAT compliance due to the length of the tax period. We have seen some businesses their business mostly is only about zero rated. However, they have quarterly VAT filing. So in such a case, you might opt to go for administrative request to FTA asking to change the length of your tax period to make it 6 months. We have seen also some companies actually their revenue is below 150 million. However, they already got monthly VAT return. So in this case, it's some additional administrative burden to those companies. That's why you have the right and you have the channel to submit a request to FTA requesting to change the length of your tax period. So in general, what is the requirements of VAT return? So in case you have a VAT return monthly or quarterly or half yearly, there is a requirement to submit your tax return within 28 days from the subsequent months of your tax period. And also, you have to settle the payments, the required payment. Also, again, this is some wrong assumption. Some they are thinking that submission by 28, the payment can be by 30, but this is not accurate. So you have to do the submission and make the payment maximum by 28 of the month of the subsequent months of your tax period. Also, it's worth to highlight that in case 28 of the month is falling on weekend or a public holiday, FTA is making extension to the following working days. And the fair to submit your VAT return, first time there is administrative penalty of 1,000 dirham, and in case of you repeat it, it's 2,000 dirham. Also, there will be some administrative penalty in case of you are making a late payment to the tax due. In addition, also there will be administrative penalties for the incorrect submit of your tax return. We will be discussing in later slides about the impact of those mistakes in case it happened. But here we just want to emphasize the matter that like VAT compliance is not something you can overlook or something you can ignore. It's something essential for any business to to maintain a proper record with FTA and also to be ready for any FTA audit on ensure the compliance. So moving to next slide. So in next slide, we will be discussing the VAT filing and mistakes might happen and issues might happen during your VAT filing. What is the impact of it? So, okay. So basically, in case, as we mentioned, in case you forgot or you did not submit your VAT return, it's either monthly or quarterly, half year. So there will be a fixed penalty of 1,000 dirham. And in case you repeated this within 24 months, there will be a fixed penalty of 2,000 dirham. This is a fixed penalty of not filing your VAT return. Then later on, let's say your VAT return it should be in a payable position and it has payable tax. So in case you file your tax late, there will be also a late payment penalty. So late payment penalty, it might happen due to two scenarios. Let's say first scenario, you file your return on time, but you didn't make the payment on. So you are going to get a penalty in the for the first month. It's a 2% of the payable amount, and subsequent months it's a 4%, and it will be coming on monthly basis percent until you settle the payment. Maximum penalty it will be 200 dirham. So this in this scenario, you already filed your return on time, but you didn't make the payment on time. And this scenario most likely is happening, especially when you are late in submitting your return and making the payment. Like many companies make it on 28 evening, and it's not reflected in the FTA portal. 28, it's coming on subsequent day, and they are getting 2% penalty. They are getting shocked. We paid on time. Why we are getting the penalty? But actually, FTA clarified this earlier that it's not about the time you make the payment. It's about the time the money land in FTA account. That's why I always encourage companies to make the payments of tax due like early, maximum like on 27. Also, in case of international transactions, make sure you are making it 2 to 3 days prior to the deadline to ensure that the money is land FTA account, maximum by 28. In the other scenario, in case you didn't submit your VAT return on time, so definitely later on when you so if you didn't submit on time, you are going to get the 1,000 penalty or 2,000 fixed penalty. And then later on when you submit your return and it has payable tax, you are also going to get a late payment penalty on this tax amount. So that's why I encourage companies, please, you have 20 days to prepare your tax return. Don't make everything in last moment. Start from the beginning of the month, make your proper check, reconciliations, submit your return as much as early you can, and settle the payment to avoid any penalties. The third impact we have in this slide is about in case you submitted incorrect tax return. So we have seen in many cases like companies due to like being in hurry or due to some they miss some information or there is no proper check happen. So they are after they submit the return, they realize that they have some issues. So now what is the impact of these issues? So first of all, based on the change happening in the tax procedures law. So if you notice these discrepancies and mistake in your return before 28, so you are allowed to edit your return and there is penalty on this edit. So again, if you submitted, let's say, your return on 20 of the month, and then by 25th, you notice that there is some discrepancy, you are allowed to do edit to your submitted VAT return without having any additional penalties. However, what if you submitted your return and after 28 you notice this discrepancy? Now you need to assess your position. You have two scenarios. One scenario, if this discrepancy result in a payable tax less than 10,000 dirhams, then in this case you are not amend, you are required to put this discrepancy or error or mistake in your current return. So in this case, after 28, if you notice a discrepancy result in payable tax less than 10,000 dirham, you will just add it to your current tax return. What if the mistake or an error you discover is result in a payable tax more than 10,000 dirham? In this case, you must submit a voluntary disclosure with 20 days, 20 working days from the discovery of the error. and actually there will be a penalty associated with this voluntary disclosure. It has a fixed penalty of 1,000 for the first time. Subsequent times, it's 2,000 dirhams, and also there will be a percentage. So if you discover this error within one of the tax period, there will be a percentage penalty of 5%. So let's say if the error is 20,000 dirham VAT amount, so you are going to get a 5%, which is 1,000 dirham as a percentage penalty plus to the fixed penalty. Definitely, if you discovered it in second year, it's going to be 10%, third year 20, fourth year 30, fifth year 40%. So up to 40%, this is going to be the percentage penalty. In the other side, what if you discover an error is reducing your tax payable? In this case, you must submit a voluntary disclosure to notify FTA, and actually there is criteria of 10,000 here. In case, for example, you discover that your payable tax was more than what it should be for like 1,000, 2,000. So this means you want to reduce your tax liability. So you must submit a voluntary disclosure. And definitely in this case, businesses need to have like a cost benefit analysis to see is it required to get this 1,000 or 2,000, or they can just keep it. So this was about the impact about the late filing VAT return, late settling the tax liability, and also in case of wrong submission of your tax return. So moving to the next slide. So in next slide, we will be discussing something called deemed supply. Actually, what is deemed supply and what is the requirements? What is the exceptions? So deemed supply, in simple language, if you are supplying something for free to anyone, so supply of goods or services without consideration means you are supplying something for free to anyone. So sometimes it will happen, like for example, company purchase some assets, and after few years company decide, okay, we don't need this anymore. So maybe they will give to the employees, they will give to the owners, they will give to a friend. So they are no longer considered business assets, they are just disposing it and giving for free someone. On the other hand, sometimes like whole or part taxable person business assets. So sometimes also for the business activity itself, like maybe you are selling goods, maybe you are a service provider, but in some cases, you are giving something for free, either to your connection, relative, friends. You are giving to even to people, like maybe you have potential customers, so you are trying to give something for free just so for the sake of getting business. So basically, if you are giving something, either goods or service, for free without a consideration, so you need to account for something we call deemed supply. Okay, so what is the exception? And uh, what is the cases that the deemed supply is happening? So basically, you have an exception of deemed supply. So in case you didn't recover the VAT input of those goods or services, then you have action of deemed supply. Means you can give it without a consideration and you are not liable for any VAT to FTA. This is when, in case you didn't claim your VAT input. Other case also, in case the supply in nature is exempted. So let's say local passenger transportation is exempted. So if you give a free ride to someone, they don't have to account for deemed supply because this supply in nature is exempted. And also there is another criteria is a little technical about the capital assets scheme. So in case of the recovered input tax was adjusted based on the capital assets scheme. So in this case, you are going to have exception from deemed supply and you can give it for free. So in principle, if you are supplying goods or service for free, you must account for VAT and you must pay VAT to FTA. The only exceptions you have, in case in the first place you didn't recover the VAT input on those goods or services. Second criteria, in case the supply is exempted supply, so you don't have to account for VAT. Third case, in case the recovered input was adjusted based on capital assets scheme. Also, part of the exception, actually, there is some amount. If you did not exceed this amount, still you have the exception and you are not liable to pay to FTA for your deemed supply. This amount, actually, the supply value for each recipient within a 12 months period does not exceed 500 dirhams. So if you are supplying something, let's say complementary and for free, within 12 months to each recipient is not exceeding 500 dirham. This means you are not liable for VAT output on deemed supply and you are falling under the exception. Other criteria is the goods should be supplied as samples or commercial gift. So in this case, the exception you have that you supply to each recipient within 12 months, not exceeding value of 500 dirhams, and it should be as a commercial gift or as sample. The other criteria also for the exception is about the total VAT input, the total VAT output for the company. It should not exceed 2,000 dirham. So this means 40,000 dirham supply value. So now one is for each recipient, you should not exceed 500 dirhams, commercial gift and samples within 12 months. On the other hand, as a whole, you should not exceed in 12 months 40,000 dirham for all your deemed supply. Other than this, you must account for deemed supply and pay the VAT. Why we are mentioning this in today's session? Because actually we have seen in multiple business this concern. It's a little overlooked and there is no the required attention is not paid for this. So moving to the next slide. So in next slide, we are going to talk about a more elaboration about deemed supply and what is the criteria and cases for it. So I think there is delay in the screen. Yes, so we have it. Okay. So for the deemed supply, what is the concern situation? Actually, if these supplies are not disclosed in the standard rated sales and VAT for the same are not paid to FTA, what is the impact? Required to file voluntary disclosure or disclose in the next VAT return pending upon the value. So this is very important in case your business is not doing the verification and required to check the deemed supply. And when we say deemed supply, we mean everything you are giving without a consideration, everything you are giving free. So you need to do a proper check and reconciliation and see how much value you are giving for free for each person within 12 months and see if you are liable for deemed supply. So what is that? If you didn't do this, then you will be liable for VAT to be paid to FTA. And in case this VAT in one tax period exceed 10,000 dirham, you are going to submit the disclosure. In case it's less than 10,000 dirham, you can correct in your current return. Also, there is another criteria which sometimes businesses they are not considering it's free items or deemed supply, which is FOC, free of cost items. So basically, if FOC, it's any goods that is provided and no input tax is not recovered, it can be distinguished. So we have seen in some businesses, for example, they always have these offers. You buy one, get one free, and two, get one free, and all. So for this one, it should be checked and verified. Either this one is falling under the single supply, like they are selling as a bundle. So the whole consideration they are seeing is for the whole items, or actually it's free So free of cost item is only not for the goods, also for the service. Sometimes businesses are giving complimentary service, so you might engage it with one of your clients for two services, and you are giving the third for free. So you need also to consider this and check if you are required to account for game supply. So ending the dim supply topic, we will be moving to the next slide. We will be having also a quick poll questions. And as usual, our audience will have 30 seconds. We'll start now to give their answers. So let's see if I am able to explain it well. So time is out, and Masha, we have 74% of audience. They give the correct answer. So deemed supply is a supply made without consideration. Consideration here means without any like monetary or non-monetary amount. So thank you for participating in the poll. And moving to the next topic, the next slide. So, in this slide, we will be discussing about the claim of expense. So, we will be discussing what is the situation, criteria, industry, and concern. So, businesses and companies who are registered for VAT, they are able to claim the VAT they are paying on their expenses with some conditions. One of the conditions that you should be making taxable supplies or you have the intention to make taxable supplies. Second condition is you should receive and keep a proper tax invoice compliant with Article 59. Third condition is you should have paid this invoice or have the intention to make the payment within 6 months from the due date. So this is in general the criteria of claim VAT input over business expenses. So what is the challenge we have here? So we have here first point is about apportionment of expenses. So as I mentioned, you can claim your expenses as long as you are making taxable supplies or have the intention to make taxable supplies. Okay, what if the case is about you are making exempted supply? So here is the challenge. You are not allowed to claim the VAT input for the expenses that are attributable to your exempted business. Okay. What if you are making part of your business is taxable, part is exempted? And we have given here the example that about real estate. So real estate, if you are managing commercial properties, it's taxable 5%. If you are managing residential properties, it's either zero rated for the first time or exempted after that. The subsequent is exempted. So in case you are managing this, so means your business stream partial is exempted, partial is taxable. And in this case, the expense attributable to your exempted supply must be blocked. You should not be allowed to claim it. And then the remaining will be you have some expenses, we call it common expenses. So in case of common expenses means you will be having some expense, but you cannot determine exactly this expense attributable to your taxable business or exempted business. So let's say for real estate, for example, you have the security. The security for the building is securing the whole building. Even though you have some maybe stores in the, you have also some residential units. So you cannot determine exactly the security fees you are paying. Is it part of the exempted or part of the taxable? In this case, you have to make a proper apportionment for your expenses. In the second point, we have also regarding claim of expenses, which business facing as a challenge, the retainment of tax invoices for expenses. So now, especially, we have corporate tax. So earlier, what was happening, you must keep your record and also you keep your tax invoices, VAT, and businesses were not giving attention for the invoices which they used not to claim it. So they were saying, I'm not claiming it, no problem, I will not keep the invoice. But now actually you have also corporate tax and you need to consider for each deductible expense you are considering in your P&L, you must keep and retain a proper invoices. So retainment of invoices, it's very important and crucial for your business. It's either you are claiming the VAT, so it will be important for VAT. Even if you are not claiming VAT, it also will be important for your corporate tax. The third challenge we are having or situation, the claim of invoices in other tax periods. So basically, in principle, the law allow you to claim the VAT input once you satisfy some criteria. First criteria, you must receive and keep tax invoice. Second criteria, make the payment or intention to make the payment. We have seen some cases, for example, you are receiving the invoice late from your supplier. In this case, you still are allowed to claim your VAT input in the tax invoice. Why? Because in the earlier tax period, you didn't meet the criteria of receiving and keeping a tax invoice. You didn't have the tax invoice to claim this expense. Many businesses are telling us we already make the payment to our supplier. Why we cannot claim the VAT for this? You cannot claim because you didn't get the tax invoice. Is it your supplier problem? Actually, yes and no. It's his problem because he must raise a tax invoice within 14 days and give it to you. But it's not his problem if you are claiming it, because if you want to claim any VAT input, you must keep and retain a tax invoice. So if you are receiving the tax invoice late, you still can claim it in the tax period which you received it. However, you must keep the evidence that you received this invoice late. Evidence can be, email communication, your supplier stamp or letter, acknowledging that he already gave you the invoice this late. Also, the other criteria which many businesses are overlooking and not paying proper attention to it, which is about the payment. So basically, one of the criteria to claim your VAT input, you must make the payment or the intention to make the payment within 6 months. We have seen for some companies, mashallah, when we see the supplier aging report, we have seen they have some old liabilities they didn't pay since 1 year, 2 years. However, they made the claim of VAT for those invoices. So businesses are required to revisit their supplier aging report and see which invoices it's overdue and they didn't pay it. And in case they claim the VAT for it, they have to reverse it, because in this case, they are not meeting the criteria for the payment of the VAT or the intention to make the payment. This is one of the important rules. Also, one of the challenges and situation we have in the market, it's about the annual wash-up calculation. So moving to next slide. So moving to next slide, we will be discussing what is the challenges that business are facing, uh, which mostly is about the annual wash-up calculation. So as I discussed earlier, in case your business is having a stream of taxable supplies and also exempted supplies, and you have some expenses, we consider it common expenses, which you cannot determine exactly is it attributable to the taxable business or exempted business. So in this case, you are making apportionment. So what is happening at end of the tax year? So for each tax register, who is making apportionment for the expenses end of the tax year, and I'm saying tax year because this is very important. Some companies, their tax year is different from, when I say tax year, I mean the VAT tax year. Some businesses, their VAT tax year is different from their financial year. So also you need to make sure that you know exactly what is your VAT tax year date. So you need to, for the wash-up calculation. So what we are doing end of the tax year, in the subsequent tax period, we are doing something called wash-up calculation. basically, in principle, if you are making apportionment, you have to make the apportionment using something we call standard method. Standard method means we are using the expenses we are making to determine what is the percentage we can claim from the common expenses. So, in like to make it simple, basically you are seeing what is your taxable expenses which you are allowed to claim in full. What is the expenses which are attributable to exempted business which you are not claiming? Also, you need to see the common expenses. You are putting aside the common expenses, and then you are dividing the taxable expenses divided by the taxable expenses plus blocked expenses or non-recoverable expenses. You are going to get a percentage. This percentage you multiply with your common expenses to see how much you can claim it. This practice you are doing for each tax period during your tax year, so either monthly or quarterly. After the tax year, in the subsequent tax period, after the end of your tax year, you need to do something called washout calculation. The washout calculation must be done using the same standard method which you use, but you need to do this calculation for the full year. When you do this calculation, you might find that you need to pay back something to FTA, or you might claim something more based on the percentage of claim you are going to get. So you can do it in this way. Second calculation, you need also to choose alternative method, and based on this alternative method, you need to do the whole year calculation and see what is the tax difference. If the tax difference is more than 250,000 dirhams, so you must make adjustment in your return. If this tax difference less than 250,000 dirhams, you are not required to do adjustment. And for the special, so for the alternative methods, so there is, I think, 5 methods announced by FTA considered as a special method. So you need to choose one of them based on your business activity and business nature. And this alternative method will help you to see what is the difference and impact. And if you are required to adjustment in your return in case the difference is more than 250,000. So that was regarding the claim of expenses. We discussed multiple situations and challenges. So now we are moving to another poll question. So basically, it's about the most hard topic. I hope I could explain it well. It's about the Hooshot calculation. It's a little technical, but yeah, hopefully I could explain it. So the question is, what is washout calculation based on? Is it apportionment of expense or apportionment of revenue? Hopefully we can see everyone answers. So time is going. So I noticed not all our audience are participating in our poll question. I hope they know the answer. Okay, so time is out. So question was, what is the washout calculation based on? And mashallah, I'm seeing the highest rate correct answers. So yes, it's about apportionment of expenses. Yes, and for the one who answered apportionment of revenue, no, this is not the accurate answer. So correct answer is apportionment of expenses. So moving to the next topic. So I will try to take these remaining topics quickly so we have time for the Q&A. Okay, so basically, for the next topic, it's about the importance of having documents for imports, and export. Okay, so for each businesses, just a moment, please. Okay, so basically for each businesses, or especially for the business who are working import and export industry, there are requirements for the compliance. So I will take it one by one. So first, let's talk about export. So in case your business is maintaining or conducting a business of export of goods, then in this case, you are treating your export of goods as zero rated. You are not charging VAT for your overseas customer. So there be a proper set of documents to maintain for the export of goods. So basically, uh, yes. So basically, for the export of goods, just one moment, please. Sorry. Yes. Sorry, I'm back. Actually, my laptop was going to run out of battery. That's why I was making sure that it's getting charged. Yes. So basically, if you are doing export of goods, there is a set of documents you must maintain. One of these documents is the invoice, the commercial invoice you are issuing. Second document is packing list. Third one is bill of lading. Fourth one is the custom declaration. Fifth one, and the most important because FTA always require it, is the exit certificates. So we have seen in many businesses that challenge more is about exit certificate because basically exit certificate is not required for customs in many cases. That's why usually logistics companies are not issuing or are not requesting exit certificates. That's why most of businesses they will find themselves they have the four documents: invoice, packing list, bill of lading, custom declaration, but they will not have the exit certificate. However, we want to emphasize that FTA is considering exit certificate is the official evidence to prove the export of goods. That's why if your business is about export of goods, please make sure that you are maintaining all the set of documents we have mentioned. And the most important is exit certificate. For the import, also, this is very important because mostly for VAT registered companies, which they are having a TRN and they are making import of goods, they are getting not paying the tax, but they are doing something we call reverse charge mechanism. So basically, the data or the information of import of goods, it's coming as auto-populated in your FTA portal. Some businesses, they are just taking this data and submitting it, taking as a reverse charge mechanism without verification. However, this is not the proper way. You are required to check the data is coming to you as import of goods to make sure that it's accurate. And in case it require any adjustment, either you need to add more or you need to reduce it. You have to do it also during your return. So reverse charge mechanism is not something you can take for granted. It's something you can take based on the documentation you have. So for the imported document, also you must keep the custom declaration, the invoice, the packing list, and also the bill of lading to prove the import you are having. So what is the importance of retaining these documents? So these documents should serve as evidence for transaction conducted. You need to provide a good reference for future related transaction, prevent also tax penalties and mitigate UAE VAT law requirements because we have seen here in case you are doing export without a proper document, so you have to make it at 5 cents, and definitely this is are going to be your business is about export. That's why you have to maintain this. You must maintain this document for 5 years definitely, unless there is an audit opened by FTA, so you need to keep it additional 4 years, and in case you submitted voluntary disclosure you need to keep it for additional 1 year other than the 5 years. And also to highlight for corporate tax, you need to maintain your record for 7 years. So definitely it's advisable to maintain also digital record because we have seen many companies, they face difficulties to retrieve their information like in a hard copy way. So it will also be advisable to maintain some digital record so it will be easy to retrieve the information at the time of request from FTA. So moving to the next slide. So next point is about the importance of having books of records. Mainly, actually, this is a message to small and medium businesses and also large businesses because we have seen challenges in both cases actually. So please make sure that you are having a proper books of accounts with VAT, excise, and now corporate tax. There is more compliance. You have to maintain your record in a proper way. You have to maintain financial record. You should have books of accounts because now this is not optional anymore. This is mandatory. So for maintaining books of accounts, there is legal compliance. So you need to ensure adherence to local and international law because, as we mentioned, as per the UAE tax procedures law, you have to maintain books of accounts to show your like balance sheet, P&L, and all, and also to avoid any legal penalties and fines for compliance. There is a penalty of 10,000 dirham if you are not maintaining your books of account, and if you repeat it, you are going to pay also another penalty of 20,000 dirham. And we have seen FTA sometimes doing audit. They will come you this month and you don't have record, you are going to get 10,000. Then you will come to you next month. Still, you don't have. You are going to get another 20,000. So there is no more. It's not optional anymore. It's mandatory to maintain your books of account. So for financial management, it also provides a clear view of financial health and performance of the company, and also aids in budgeting, forecasting, and strategic planning. So this is also especially for small and medium businesses. Sometimes business owners focus only on the operation, cash flow, and that's it. Actually, they are not looking in if they are in loss or in profit. They don't have numbers. When we talk with most of them, okay, they feel they are in profit. They feel the business is growing, but as numbers, they don't have. So it will be better also either to hire in-house accountant or outsource an accountant. But at least you should have an idea about the numbers of your business when it comes to P&L and balance sheet. So also this will help you for audit and transparency. This will facilitate smooth and efficient audit process, and also will enhance the transparency and accountability within the organization. And also for the informed decision making, this will offer accurate financial data for making business decisions. As I mentioned, once you see the accurate numbers, then you will be able to take a proper decision. Also, it identifies the trends, strengths, and areas for improvement, because the analysis of your expenses and sales will give you better idea about what is the areas of improvement. So moving to next slide. So basically, the importance of having books of accounts is also important for the increase the stakeholder confidence. So this will build trust with investors, bank, and other stakeholders. This is also a message for startups. We have seen some startups, they are doing well, and then after 1 year, 2 years, they want to invite some investors, and then they realize that the financial statements, so then they require to do, backdated backlog data to be entered to make the proper financial statements. So if you started from day one, then you are increasing the possibility to invite the business because you will be having a trusted and reliable data. Also, this will demonstrate the organization financial stability and reliability. Also, maintaining record importance comes about for tax preparation. So for if you are having and maintaining a proper books of accounts, this will simplify tax filing and ensure accurate tax reporting. Also, it will help you to claim legitimate deduction and avoid discrepancies. As we say for VAT, if you are having a proper record, this will help you to prove your sales and your expenses transactions. Now coming to corporate tax as well, for each deductible dirham considering as expense, definitely you have to submit and keep the proof of this expense. So books of account record, this will be important for this part. Second is about record keeping. You must maintain a historical record of business activity and also provide a reference for future transactions and financial review. Importance of this to maintain books of account is essential for smooth operation, compliance, and growth of your business. It's not only legal requirement but also financial management and business success. So that was the end of today's topic. So now we are moving to the most weighted part, which is the Q&A. So please moving to Shruti, so she can take the Q&A. She can assist me in the Q&A session. So please, if you have any question, just submit it in Q&A, and I will be answering it.
Thank you so much, Mr. Huzaifa, so for your insightful session and making it so engaging for our audience. Now we will move on to the Q&A section, but additionally we have made our webinars feedback section as live as well. I would like to request our audience to take a moment to complete our webinar feedback form. Your feedback is very valuable to us, and in order to improve our sessions in the future, it will help us. So now I will invite Ms. Shruti Gulati and Mr. Huzaifa to take the Q&A session and to make sure that all the queries are answered. Thank you.
Thank you, Hajra. So we have a first question from Mr. Gauss asking, how do we decide the financial year if we do not have the memorandum of association and power of attorney, and additionally if any other documents are required?
Sorry, Shruti, but your voice is breaking. If you can please repeat.
Our first question is from Mr. Gauss asking how to decide the financial year if we do not have the memorandum of association and power of attorney, and if additionally any other documents are required.
So basically, financial year, actually, it's decided in the memorandum. So I'm not sure if you meant for your companies there is no memorandum. You have the memorandum, but it's not mentioned there is a financial year. So please just make sure that you see the memorandum, because for companies, especially for LLC and all, they should have a memorandum of association. So financial year should be mentioned there. And in case the financial year is not mentioned there, it can be based on company board of director resolution. You can determine the financial year and you can get this attested. And based on this, you can act. But please check the memorandum, because 99 of the cases, it will be mentioned in the memorandum of association.
Okay, thank you. Then we have another question by Mr. Allen asking what happens at deregistration stage if you have not kept the relevant records, such as the bank statement or certified accounts.
So in case of deregistration and you don't have the proper record, then you will be subject to mostly FTA audit, tax audit, and also tax assessment. Because see what is happening now, if you are going to submit a deregistration, definitely FTA will be viewing your profile and they will be asking questions. And as per the tax procedures law, you must maintain your record for 5 years. So FTA has the right to ask you for such information. In case you don't have this information, you might be subject for tax assessment, and FTA might take some action towards your returns. For example, if you have expenses and you are saying I don't have the record of this expense, so basically FTA might. So for example, if in a tax period you had sales of 100,000, expenses 50,000, you don't have the proof of expenses, FTA might remove this 50 and they will ask you pay the tax for this. And definitely it will come with penalties. So going for deregistration is not about only canceling your TRN, but also is about making sure that you are ready to answer FTA questions.
Okay. So next question is by Miss Mia, asking they're filing quarterly, and in what situation are they required to file the VAT monthly?
So first of all, either filing monthly, quarterly, or half yearly. This is about the VAT certificate the company is have. So if your VAT certificate states that you have quarterly VAT filing, then you are required to file quarterly. If your VAT certificate mentioned monthly, you have to do it monthly. Um, Also to give more information, basically the change of the tax period length, this is will happen based on FTA requirement or taxpayer requirement if you submit. So only if you ask the FTA to make it monthly and they approve your request, then you have to do it monthly. Also, if FTA found, for example, your business is growing, you are exceeding 150 million revenue in a year, they will decide to make your return as the monthly. They will notify you and your VAT ERN certificate will be changed to monthly. So as long as your VAT certificate is about quarterly, so you are doing great, you maintain filing quarterly, and there is no requirement to make it monthly.
Our next question is by Mr. Adonis. He is asking if we have
Mhm,
received an invoice from outside UAE and the invoice
mhm.
amount is included in the local VAT, how can we record the reverse charge mechanism? And should we consider the full amount with VAT or
Okay.
without it?
Okay. So I'm not sure if I got this question correctly, but let me. So basically, this is usually happening for services. You might be receiving invoices from outside UAE from some multinational companies, which is established outside of UAE. However, they will be having a UAE TRN number and they will be charging you VAT. In this case, this is not going to be import of service and subject to reverse charge mechanism. This is going to be as a claim of expenses. It will be part of your expenses. Why? Because the supplier is registered in UAE and charging you VAT. The one will be subject to reverse charge mechanism in case you are receiving invoice from overseas supplier, for example, for services, and this supplier is not registered in UAE and you are registered, then you need to make self account of VAT and consider it import of service and make it in recharge mechanism.
Okay. Then we have another question by Mr. Farooq asking the proof of payment, is it the receiver of goods or the exporter of goods need to provide this? I'll repeat the
Uh,
question
Sorry,
once
Shruti,
again.
your voice, your voice is break. Yes, please.
Okay, Mr. Farooq is asking the proof of payment, is it the receiver of goods who needs to provide it or the exporter of goods?
The question is about what is the proof of payment.
Yeah, and who needs to provide it?
Okay, so now when we talk about claim of expenses, the proof of payment, definitely as a taxpayer who claims some expense, you need to provide FTA with the proof of payment. Okay, what can be the proof of payment? One is it can be a receipt voucher from your supplier. So once you make payment to your supplier, he will give you a receipt voucher. Second is it can be the bank transfer. So if you pay it to your supplier by bank, so you will be having a bank transfer advice. So this is also a proof of payment for the invoice. Third is in case you paid in cash, so you should have, like petty cash ledger or cash ledger. This transaction should be showing there. So in case of if FTA is asking to provide the proof that you have paid this expense which you already claimed, you can give here those evidence as a proof that you made the payment.
Okay. Then we have another question by Miss Martina, where she's asking
Mhm.
if there has been a late filing, but there's no penalty or anything charged.
Okay, so okay, let's agree on one thing that there is a law and FTA is implementing the law. So in case FTA did if FTA did not take some measures as per the law, it doesn't mean that you are exempted or you are waived. It means that maybe there is some technical errors which made FTA not taking the proper process. And later on, while FTA doing some internal review to your account, they will notify that you didn't file your return and they might impose a penalty. So the penalties which I mentioned, this is as per law. If you committed this thing mistake and you didn't file your return, but the penalty is not imposed, mostly it will be due to some technical glitch, and at some point FTA will review this and impose a penalty.
We have another question from a wonderful audience asking what to do if the filing date is on a public holiday or on the weekend.
Yeah, so basically, if the filing date is in weekend or holiday, if they will be extending the deadline to be the next um, working day. And usually, actually, recently we have seen this, I think, for excise return in last month, because for excise tax, the deadline is on 15 of each month. So we have seen, I think, in last Eid holiday, it was 15 was in between the holiday, so it was extended to the next following day. So don't worry, in case the deadline is falling on a weekend or holiday, you can enjoy your weekend and holiday because the deadline will be extended to the next working day. However, just before going to holiday, try to finish your work. So come back, you can just submit.
Okay, we have one more question. How about if
Yes.
the supply is out of scope? Does it have the same treatment with exempt, or do we have to apportion the input tax?
Okay. So when it comes to out of scope supplies, so it will not have same treatment of exempt because this is also one of the criteria for VAT. You can claim the VAT if it's attributable to out of scope business. If it would supply in UAE, it would be taxable. So this means, for example, if we talk about Jabal Ali companies, they are in that designated zone. They are doing export of goods, which in custom terms we call it transit out transactions. This is considered out of scope. So, but same time you are allowed to claim your expenses. Why? Because if this supply of good would happen inside UAE, it will be taxable, right? So for out of scope transactions, you are still fine only if it would be supplied in UAE, it would be taxable, then you are okay. You still have the right to claim your full input tax, and there is no requirement for apportionment.
We have another question by Miss Mia asking
Yes, please.
at the time of liquidation, when should they start filing for VAT?
Okay, so actually for liquidation, it might be multiple scenarios. Okay, so first scenario, if your business is doing fine, however you decided to do liquidation. When I say doing fine, I mean your sales is more than 375. However, you decided to do liquidation. This means once as a board of director signs a resolution of going for liquidation, you must notify FTA within 20 working days. That I do not expect to make supplies. I already took a decision. I have board of resolution that I am going to liquidate my company. This is scenario one. Scenario two, in case your business is not doing good, means you have sales below 375. So in this case, even yet a board of resolution to liquidate your company, you have to submit as well a request for VAT deregistration. Why? Because you are below the threshold. So we have here two steps. One, if you are below threshold, so either you have a board resolution for liquidation or not, you have to go for deregistration. Other scenario is if you are above the threshold, however, you already took decision to liquidate the company, then you need to submit a request to FTA also to upload this board resolution. And you mentioned that you are not expecting to do any sales because you already took the decision to liquidate the company.
That's all. Thank you for answering all the questions.
Okay, thank you, Shruti.
Thank you.
Thank you, everyone in the audience, for joining us and sharing enriching experience. And thank you so much, Huzaifa, and thank you so much, Ruti, for this insightful and engaging Q&A session. We are getting an overwhelming response right now. People are pouring their questions in, but due to time restraint, we cannot take all the questions right now. So this has been an excellent response from our audience. So, in order to make sure that all the questions are answered, you can, if you have any queries regarding excise, VAT, or corporate tax, kindly drop us an email or give us a call. The numbers are mentioned on the screen, and our business development team will reach out to you and they will make sure that your questions are being answered properly and your issues are being resolved. And thank you so much once again to Josefa, Shruti, and our wonderful audience for this session today. And we will see you in the next session. And till then, goodbye and have a great day ahead.